Introduction to Investment Strategies for Beginners. Investment is a crucial component of financial planning that allows individuals to grow their wealth over time. While it may seem intimidating at first, understanding the basics of investment strategies can empower beginners to make informed decisions and achieve their financial goals. This article serves as a comprehensive guide to introduce beginners to various investment strategies, providing them with essential knowledge to embark on their investment journey confidently. What is investing? Investing involves allocating money with the expectation of generating income or profit. Investors purchase assets such as stocks, bonds, mutual funds, real estate, or commodities with the aim of achieving capital appreciation, earning dividends, or receiving interest payments. Key investment concepts. 1. Risk and return. Investments typically involve a trade-off between risk and potential return. Higher risk investments may offer greater potential rewards but also carry a higher chance of loss. 2. Time horizon. The length of time an investor plans to hold an investment affects their strategy. Longer time horizons generally allow for more investment approaches. 3. Diversification. Spreading investments across different asset classes and sectors can help mitigate risk. Diversification aims to minimize the impact of poor performance from any single investment. Setting investment goals. Before diving into specific strategies, it's essential for beginners to establish clear investment goals. Setting goals provides direction and helps investors tailor their strategies to achieve desired outcomes. Common investment goals include retirement planning, building a nest egg to support a comfortable retirement, wealth accumulation, growing capital to achieve financial milestones, such as buying a home or funding education, income generation, generating regular income through dividends, interest, or rental payments, and capital preservation, protecting principal investments from inflation or market downturns. Asset risk tolerance. Understanding risk tolerance is crucial in selecting appropriate investments. Risk tolerance alludes to an investor's willingness and ability to endure irregular rising and falling in the worth of their investments. Factors influencing risk tolerance include age and financial stage. Younger investors often have higher risk tolerance due to more extended investment horizons. Financial situation. Individuals with stable income and savings may have higher risk tolerance than those with limited financial resources. Investment goals. Goals requiring faster wealth may necessitate higher risk investments. Basic investment strategies for beginners. Dollar cost averaging, or DCA, necessitates investors to invest a predetermined quantity of money at systematic intervals, irrespective of market conditions. This strategy reduces the impact of market volatility by purchasing an additional amount of shares at a low cost and fewer shares at a higher cost, eventually achieving an average cost per share at a later stage. Buy and hold strategy involves purchasing investments with the intention of holding them for an extended period, typically years or decades. This strategy requires patience and a long-term perspective, ignoring short-term market fluctuations in favor of potential long-term gains. Asset allocation entails spreading out your investments over different securities such as equities and fixed income. In addition to this, cash and foreign currencies, real estates, infrastructure, commodities, and money market instruments. The goal is to balance risk and return based on investors' risk tolerance and financial goals. Common asset allocation strategies include aggressive higher allocation to stocks for potential higher returns but also greater risk. Conservative higher allocation to bonds and cash for stability and lower risk. Index funds are mutual funds or exchange-traded funds, or ETFs, that track a specific market index, such as the S&P 500. Index fund investing offers diversification across a broad range of assets and typically has lower fees compared to actively managed funds. Dividend Reinvestment Plan, or DRIP, allows investors to reinvest dividends received from stocks back into purchasing additional shares of the same stock. This strategy harnesses the power of compounding, where reinvested dividends generate additional income over time. Conducting research and due diligence. Beginners should carry out an in-depth and comprehensive research before making any investment decisions. Key steps include financial goals, assessment. Align investments with specific financial objectives and timeframes. Risk assessment. Evaluate the risk associated with each investment and determine if it aligns with personal risk tolerance. Fundamental analysis. Assess the financial health, performance history, and future prospects of individual stocks or bonds. Technical analysis. Analyze price trends and patterns to forecast future price movements. Monitoring and adjusting your portfolio. Investors should regularly monitor their portfolios to ensure alignment with their goals and risk tolerance. Periodic portfolio reviews may involve rebalancing, adjusting asset allocations to maintain desired risk levels and investment objectives, tax considerations, managing investments in a tax-efficient manner to minimize tax liabilities, staying informed, keeping abreast of market trends, economic indicators, and regulatory changes that may impact investments. Conclusion. In conclusion, investing is a powerful tool for building wealth and achieving financial independence. By understanding basic investment strategies, setting clear goals, assessing risk tolerance, and conducting thorough research, beginners can navigate the complexities of the investment landscape with confidence. Remember, investing involves inherent risk, and seeking guidance from financial advisors or professionals can provide valuable insights tailored to individual circumstances, as I'm not a financial advisor. With careful planning and disciplined execution, beginners can embark on a successful investment journey towards their financial aspirations. Invest wisely, and here's to your financial success.